In this video, we're going to catch up with what's been happening with the euro over the last week and the big levels to watch out for in the days ahead. Hello, I'm David Jones. This is the weekly video I do with Capital.com, where we focus on the foreign exchange market in some detail. We're going to look at the euro today. We've come back into this week after the holiday in many parts of the world on Monday, with people wondering, are we about to have another major crisis for the Eurozone? Of course, a couple of years ago, we had the latest Greek crisis, and now we're seeing the euro under pressure again. And it's really because of what's been happening politically in Italy. So we've seen a failure to form a coalition government. We've seen an interim prime minister suggested by the president of Italy, which it hasn't gone down well. The interim prime minister is known to some as Mr. Scissors because of the spending cuts imposed in the past on the public sector in Italy. So there's a feeling that we're going to have another general election in Italy. We've got the classic case where markets hate uncertainty, and we're seeing the euro getting hit really heavily. But there are some big levels to watch in the days ahead. So let's take a look at the charts. So let's get on the platform and take a look at this euro dollar chart. Just maximise the chart to fill the screen. So you can see the size of the decline. It was just in February this year that the euro hit more than a 3-year high against the US dollar. Since then, looking at where we've started this week, it's lost about 1,000 points. So we've seen it drop 10 cents, clearly accelerating this week off the back of the Italian political crisis. So the euro's down about 8% in less than 4 months against the US dollar. Last time round, we were looking at this, the trendline support that the trendline had been in place for about a year, just over a year, and 117 was the level. It held for a couple of days last week above 117, but you can see it's gone crashing through. The next big level we're looking at is really where we are now. You know, it spiked through this level briefly, but 115, 115.50. It's the lows from November last year, just before the market surged again, moved 1,000 points higher to hit those 3-year plus highs. So this is another area to watch. You know, if we're going to see some sort of confidence start coming back in, let's see how it reacts on the low for the week so far, just ahead of 115. I think in these sort of situations, when we have a market moving this quickly, I think, like I've said before, we can look at things like the RSI. So we have a very oversold 14-day RSI, but look, it's been oversold now for about a month. You know, so just because the RSI is oversold doesn't mean this market has to bounce back. You know, and clearly when we have worries about what's going on in Italy and what it means for the rest of the eurozone, you know, that's where we see this market, markets like this under pressure. So things like RSI, I think, become less relevant. But let's look at some short-term levels to watch. If we do see this market start to rally, what could confirm that maybe for now the worst is over? Let's just change it to an hourly chart. So you can see the size of the decline over the last 5 or 6 weeks or so. On Sunday night, so in Asian trading on Sunday, the euro did gap higher than Friday's close. So it did look as if markets weren't too worried by the weekend's developments, but that changed as Monday went on, and again into Tuesday, when people returned from the holiday, the Monday holiday. You know, the selling really took hold, and that's where we've seen the market push lower. So what are the levels to watch? I think maybe the first one to look at, the highs from last week, so the middle of last week, around about 117.50. Let's just pick that up on the chart. So I've zoomed in a bit here, and this is what we're picking up on. So you can see this 117.50 area, what a problem it was over the past week or so. 23rd of May, rallies up there. Has another go again on the 24th of May. Again on the 25th, and again just earlier this week on the 28th, on Monday. So if we do get any sort of convincing rally from here, watch how it performs around 117.50. If you want to get short into strength, that could be a good opportunity with stops above. But I think if we're going to shake off, at least look to shake off some of this current weakness, for me, 117.50 is the level it's got to break. For now, clearly, it remains under pressure. So the lows so far are an obvious one, 115. And we saw all the way through last week, euro dollar could not get above 117.50. So that's the barrier to watch. I think if we do see a rally through 117.50, we could see some of this pressure taken away from euro dollar. But at the moment, at the time of recording, clearly it's a market that's still weak. The Eurozone situation will be a major focus for markets this week, but there's plenty more going on. On Wednesday, we've got the latest US GDP figure. Then, of course, on Friday, it's the non-farm payrolls. Normally the biggest event in any month for markets, the latest US employment figures. They could well be overshadowed by what goes on in the Eurozone this week, but that's Friday lunchtime, 1:30 UK time, and we're expecting about 185,000 jobs to have been added in the US economy over the last month. We'll start wrapping things up there, but as usual, if you have any questions or comments or a different view on the euro, leave us a message in the comments down below. If you like the video, click on the thumbs up, and to never miss out of the videos we upload during the week, we look at indices, cryptocurrencies, trading psychology, all of this sort of stuff. Just make sure you're subscribed by clicking the subscribe button, and there's that alarm bell icon next to it. If you click that, you get automatically notified every time we upload a new video. But we'll leave it there for this week. So from me, David Jones, and Capital.com, I hope you have a good trading week.